Hello and welcome to our webinar on how will ESG evolve post-COVID-19. I'm Andrew Tate, Global Head of Content, Production and Strategy for Minds and Money. Before we start, a couple of housekeeping comments. The webinar is scheduled to run for 45 minutes. All registrants will receive a copy of the recording of this webinar via email. You can ask questions at any time by using the Q&A tab in the panel at the bottom of your screen. And if you experience any trouble with sound, we recommend you exit the webinar and then log back in again. The moderator for this webinar is Jamie Strauss, CEO and founder of Digbee, an on-demand research platform providing independent, objective and accredited peer reviews of complex mining studies. Jamie also sits on the board for London Mining Week. Over to you, Jamie.
Thank you, Andrew, and thank you, Mining Beacon, for hosting this event. I'd like to start off, we're going to do this slightly differently. We're going to launch a poll now, and then we're going to ask you to vote on that, and then we'll launch it again at the end to see how anything's changed over the course of the panel. So the question is, on your screen, to what extent should objective ESG metric factors in short-term senior executive compensation be impacted? And the options are 0, 5 to 10, 10 to 20, and 20%. So if I could just start off introducing or asking the panelists to introduce themselves. I'll start on my screen going around clockwise. So Mike from Orion, could you introduce yourself?
Yes, hello everyone. Thank you, Jamie. This is Mike Rotniak. I'm an investment associate with Orion Resource Partners based in London.
Thank you. Pippa.
And I'm Pippa Malmgren. I'm a former presidential advisor, but now the co-founder of H Robotics, which makes equipment for mining sites.
Nigel.
Good afternoon, everybody. My name is Nigel Robinson. I'm the Chief Executive Officer of a company called Central Asia Metals PLC. We're listed on the London Stock Exchange with operations in Kazakhstan and North Macedonia.
Mark?
Yes, hello, I'm Mark Child. I'm the CEO of Condor Gold. We've got a permanent gold project in Nicaragua.
And Aldo?
Good afternoon, everybody. Aldo Pennini. I'm currently working with a risk management outfit called Satarla. Before that, I was Communications Director for the International Council on Mining and Metals.
Thank you all very much indeed. So we're going to kick off with the first question. Does the mining industry deserve its generally negative perception in society? And can you be optimistic of an improved perception post the post-COVID world? And in just thinking about this, how do we go about, and if you assume if it is a negative, and I think that's the general consensus, at least from my chair, is how do we go about changing this at both macro level and also at the individual level of junior companies? And perhaps I ask the two operators first to go. So Nigel, do you want to have a go?
Do I want to have a go? Yeah, I think you're probably right. And generally the perception is probably negative. There have been a few high-profile disasters in the mining game, Brumadinho being the most obvious one and the most recent one, I guess. But sometimes I think that negative perception is overdone. I think the mining industry does a lot. I think in many terms, across most sectors, effectively, in what's now becoming a real focus for sustainability and ESG. I think the mining industry itself is more advanced than many other sectors because we work in fairly isolated parts of the world. We have to deal with local communities, and just by the nature of the industry, I think we have a lot to do, and I think we're pretty advanced. And ESG, I think mining does a lot. But certainly from a marketing point of view, I certainly think we could do more. If you think about what mining delivers across the patch, the world cannot really effectively operate without mining materials and products. If I think about our own case, for example, we produce copper, we produce zinc, and we produce lead, all vital base metals in the development of the world, in the economy of the world. Copper for electric vehicles and a greener economy, zinc for galvanizing steel, for making steel more longer lasting, if you don't have as much scrap, and lead for vehicles that people drive around the world in, etc., for developing economies and lots of other things. So I think, you know, it has got a negative perception. I think there's lots we can do about it. I think the industry is waking up to that and is starting to do things. And I do genuinely believe that this focus on ESG and sustainability reporting will help that perception of the mining industry over the years. But it'll take some time. It won't happen overnight, but it'll take some time.
Thank you. Mark, do you want to comment?
Yes, I mean, particularly how do we go about changing things at the macro level? And if we just take the UK at the moment, where we're mainly based, we don't have an industry trade body that represents the industry, unlike the Canadians with the Prospectors Developers Association of Canada. So at the macro level, I think if we, certainly post-Brexit Britain and so forth, if we wish to provide a leadership role from the corporate governance and ESG and so on, then we need to have a trade body that really functions. And that means that the Rio Tintos of this world, the BHPs, the top 5 big mining companies, massive market caps, need to get together to fund that because the juniors simply can't, certainly in different bear markets. So I think in what we could do about it, there needs to be more of a trade body. And at the junior level, the finance, I think it's already changed a bit with particularly IFC performance standards. We should bear in mind that the performance standards in mining were adopted by the IFC World Bank in 2006. So although ESG is the buzzword right now and has been for some time, I mean for the last 3-4 years, the mining sector has actually been, and the juniors, many investments, particularly when they're led by the IFC or some of the big institutions, insist that the juniors actually adopt the IFC performance standards. And you know, as many of the participants are familiar with those, they range from everything from a standard on labour, resource efficiency, community, land, resettlement. It's all about sustainability, dealing with indigenous people. So those standards for the mining sector have for many of us have been in place for decades, and particularly those ones in the IFC. I think they can continue. How do we change it for that sector? I don't think you can regulate, so I don't think you can get the exchanges to insist that they adopt IFC performance standards, for example, or nomads. I don't think regulation is the way forward. It'll have to be mainly investor driven, and I think more of the larger funds will insist that people adopt these procedures locally. And I think that's a continuing trend which we'll see.
Yeah, Mark, if I could just add to that, it's interesting you say that from Orion's perspective, which is an alternative investor into the mining space. We have now committed completely to adhering with the IFC performance standards. So what that means is that, excuse me, any investment from our new third fund, the portfolio company or the project at the time of funding has to be IFC performance standard compliant or have a clear sight in the near future to becoming compliant as a covenant to the deal. So I certainly agree with you in the fact that the investor community, both generalist and mining specific, are getting much more focused on ESG, and it's becoming, you know, for us at Orion at least, it's always been important, but you know, now when we analyze projects right off the bat, we look at ESG components right there up there with you know, financial metrics, geology, and the more traditional technical things that we would have looked at.
Right, that's interesting. I didn't know you were adopting that. So there we are. My comments taken.
Yeah.
Pippa, do you want to comment on anything with that?
Yeah, no, I just think that, look, I've worked on corporate governance issues since I was the president's advisor when we had Enron. And I think that corporations in every sector have been paying ever more attention to this kind of double bottom line. And now, as Mark mentioned, the investors are becoming extraordinarily proactive. Maybe the best example being the Church of England Pension Fund tailings dam initiative. And that's $13.5 trillion, or it could be pounds, but I think it's dollars, coming together saying you have to adhere to certain standards. But frankly, what's interesting to me is in the juniors category of miners, they're the most innovative. They're the ones who are really having to adopt new technologies the most quickly, The big players are a bit slower. They got process. And so the places we're going to see this adherence to ESG requirements happen the fastest will be amongst the juniors. In the world that I'm in, I'm all about providing greater clarity, the data that you need in order to understand what is happening to my tailings dam, what is happening on the mining site. And so that greater information transparency makes it even easier to adhere to whatever the standard is that you're putting in place. But I think this is a universal phenomenon, not only in this industry.
Interesting. And Aldo, maybe a few comments from you, and particularly with your knowledge of these initiatives that go back so far, how much, particularly with what Mike and Mark were saying with regards to the IFC performance standards, how these performance standards, which are related, even the Equator Principle ones, have gone from 2003, I think it was, all the way to now, and all the new initiatives coming out, and how that may aid or abet the issues.
Well, I think the comment to make here is that in addition to the IFC performance standards, you now have the ICMM performance standards, International Council on Mining and Metals, which were announced about 18 months ago. And they aim to consolidate a range of these initiatives into standards that are verifiable at mine site, which is a new development as far as the application of these standards is concerned. So we've got 38 of these new standards out there, and at least for ICMM members. And to Mark's point, there is an organisation that picks up at least the 27 largest mining companies based in London, very much focused on lifting sustainability performance. But to your point, what is missing is a convener for the junior sector, or a better way of the juniors and the majors working together and learning from each other. So I think there is a simplification of these standards, or a consolidation of the standards emerging. Two more points. One of the challenges for the junior sector is translating that complexity into something simple that can be delivered on the ground to address the concerns of the relevant stakeholders and constituents. But as we're talking about perceptions, one of the challenges the industry has faced is it has not communicated, it has not told its story effectively over time. It's an industry that tends to keep its head below the parapet historically. And in recent times, there's been an effort to change that by communicating more what it does, and more to the point, how it addresses issues of concern to society. So moving beyond the good things we're doing, or we think we're doing, to what is really of concern to society and how we're going about addressing those issues. We learn from that experience that you're able to shift perceptions because you're addressing the issues that are of concern to your audiences. For the juniors, what does that mean? Communicate. Easier said than done. The seniors or the majors find it a challenge themselves, and they've only recently come into this space of learning to communicate more and better. But I think there's still a challenge for the junior space. You simply don't have the bandwidth to work out what to do in this space, to be honest with you. Yeah. And it could be as simple as, adopting social media, getting the CEO out there in YouTube, telling people who they are and what they're about. Very simple stuff like that. But it does require resourcing. It does require commitment. So I think the bar is fairly low there, and that there's plenty of opportunity for the junior space. And as Pippa said, there's a lot of great stuff already happening in the space. We're just not hearing about it in a meaningful way. And just one final point in terms of reputation and perception. Individual companies may be well perceived in the communities within which they operate, but the industry as a whole is not well perceived. So the need for a collective voice is ever more important, because individual companies cannot do it on their own. They will just not be able to bring the whole industry with them. And by working together, as happening with ICMM and other initiatives at a national level, that can start to shift the dial. But it's very early days, and a lot more effort is needed, and hopefully input from the juniors.
Yeah, good points. Yeah.
I'm just going to ask Pippa to comment, because I know she had her hand up on something there before we go on to the next question.
No, just also to say that question came in, I saw, how do we adhere to ESG when there's no universal standard? And then that's a reasonable question. And I do think that the standard is moving and changing. So things that we used to talk about, like what is the environmental damage impact of a mining site, was the old focus. Today, you know, biodiversity gets drawn into the question of ESG compliance, human rights, many more things than we used to talk about. And so the other thing is the definition of what you call the social license. You know, what is your freedom to operate given the other stakeholders? And they too are changing the definition of what is required. And I think as that conversation's intensified, the stakeholders that used to only be concerned about limited issues are now concerned about broader issues. Like they do want employment in their communities. They do want the jobs. They do want the industry to succeed. It's no longer like it used to be in the old days, whether it was an us versus them, you know, the locals versus the international miners. Much more collaborative conversations are absolutely possible and happening now. But this question of which ESG standard are you adhering to, that still isn't fixed. And maybe in a way that's a good thing because it opens the door to these other aspects, which are also important.
Thank you. Thank you very much. That's brilliant. And it kind of brings us, actually, I might just ask Mike and Beacon Events if you could stop the poll now, and then we'll put it back on again towards the end and see if there's any significant change. If I could just go on to the next kind of topic, because you were talking about this discussion, Pippa, and I think we need to kind of come back to that. And really at the end of the day, and it kind of almost relates to some of the areas that Mike was saying, is that, or actually which Mark was saying, with regards to the investors need to drive this in order to make it happen. And are the boards having the right conversation? Have we got the right boards in place in order to deliver the hopes and aspirations of a more responsibly sourced raw material supply chain? And what other tools do we need to allow them to effectively jump on top of this topic, which quite understandably is not new, but new in terms of reporting? Yeah. Mike, perhaps you want to comment on that.
Yeah, of course. Thank you. I do think that boards are having the right conversations around ESG and really moving in that direction. I think it would be irresponsible to ignore or to mismanage ESG risks associated with one's company. You know, I think it's really evidenced by the fact that when we have junior miners or larger mid-cap and major miners come and pitch us projects or pitch their company to us, we see the ESG metrics, you know, slide 2 or 3 of a pitch book. So they're showing us what they have done to help their local community, or how, you know, they've been able to reduce their environmental footprint right up there with their, you know, IRR and their CapEx and their capital intensity and things like that. And for most of these people that come through, they're actually very proud to show us these ESG metrics. And I think that's certainly part of a company culture, and the company culture is ultimately driven by the board and by management. And so that to me really says that boards are having the right conversations, and that they know, you know, mismanagement of ESG risks can have a detrimental effect to their reputation, both locally, to the global investor base, and then ultimately to their shareholder price. So I do think
okay,
so.
That's interesting. Nigel, I remember listening to Marco Tufani at the BMO conference, and he argued very strongly that the impact that ESG is having is not, as is often perceived, is not a negative to the cost of capital, but actually an improvement to the cost of capital. Would you agree that in the same light as to what Mike has just been saying?
Yeah, absolutely. I mean, I was at the same conference, I think, Jamie, and I thought he spoke very elegantly about this impact between sustainability and costs. Because ultimately, I mean, to be a sustainable business, you have to look at the bottom line all the time. You have to be a profitable business, otherwise you're not a sustainable business. But all the other additional elements of ESG, you have to factor in properly to your costs. And, you know, it comes down across the whole circle in terms of investors wanting to invest in the right companies. And those companies now are the companies that are looking at sustainability and ESG and behaving in the right manner. And coming back to the question of our boards having the right conversations, I hope most of the successful companies, their boards will be having these conversations. And I speak for my own company. We've just recruited Dr. Gillian Davidson onto our board because she's an expert in sustainability to challenge the management more in this field, because we recognise that it's absolutely paramount to our success moving forward. So, yes, we have to look at finances as we've always looked at finances traditionally, and being profitable and strong balance sheet and all the other things. But the additional costs of sustainability, I think, are viewed in a more positive light by investors because of the focus on ESG and sustainability. So it's not negative anymore to say, oh, we spent a little bit more money on this project because it's a greener project and it reduced our greenhouse gas emissions. I think they view that in a far more positive light than they may have done 5 or 10 years ago. So I think, yes, I think the conversations are happening in boards right across the country and the world, really, to make sure that this is top of the agenda, because if it's not top of the agenda, you're going to very slowly slip down the investment agenda for most investors, I think.
Pippa, I see your hand up.
Yeah, I think we just had another question come in, which is the right question, I think, which was, do we have the data to know what the issues are and whether compliance is happening or not? And I think this is absolutely crucial. Boards of directors can only be as powerful as the information they have to work with. And this is one of the reasons that I created this company that I run, which makes drones and autonomous vehicles. So, for example, you talk to mining firms in Australia, and they'll say, you ask, how do they monitor the tailings dam? And they'll say, well, we send a guy out and he walks around the thing once a day, and that's in like 110-degree heat. And you find they're having heat stroke, spider bites, snake bites, broken ankles. This is how they're doing it. And the person can't even see with their own eyes the micro cracks. They can't see what is the basin shape, whether the liners are coming unstuck. So to create the tools that allow the board to be able to see the comprehensive picture of the tailings dam, what's the evaporation rate, what's the toxicity level, what's the shape of the liners, are there microcracks? These kinds of inputs allow the board to make better quality decisions. And I think now this is part of the digitization of the entire world economy. It comes to mining as well, and it can only improve decision making.
Embrace technology by the sounds of it. Mark, I'll come back to you in a second, but Aldo, just from the outside as a kind of public affairs professional, rather than looking from a corporate, maybe from an internal perspective that most of the other panelists have commented on, how do you see this impact with regards to having the right conversations at board level from the outside?
I think there's been some progress, but it's patchy, and there's certainly a long way to go. You have some of the leading, the big players possibly having those right conversations, and probably a number of the juniors. But just to give you a number, of Australia's top 50 mining companies, half of them don't have sustainability reports. Of Australia's top 50, half of them don't have sustainability reports. Now that tells you some conversations are not, they're either not being had, or if they're being had, they're not the right conversations. And so I would imagine that there'll be a similar story in other parts of the mining world. And just to give you another example, 3 years ago you would be hard pressed to find a board that was talking about responsible supply. Today, you've got customers going on mine sites, you've got the automobile industry, you've got the Apples of the world, you've got the Siemenses going on mine sites to verify performance for themselves. Now, it's certainly now on the board agenda, certainly for those companies that are being impacted. So I think there's certainly a long way to go. And to Pippa's point, I'd add this: data is important, but there is such an amount of data. What data is actually important? And are we talking about outputs, or are we talking about impact? And when you have those key conversations with your stakeholders or the investors, and so they want to know about impact. They want to know what you're doing to make something better or solve a problem, not how many widgets you're producing or reports you're putting together. Now that's a little bit sort of provocative there, but those conversations come down to that sort of black and white kind of perspective, I guess. So I guess to answer finally answer your question, Jamie, we shouldn't kid ourselves that we're doing better than we actually are. We feel that we're peddling quickly within the sector, but outside the sector, apart from those organisations that are already engaged, for example, the UN or WWF or the Church of England, the vast majority of the stakeholders don't know what's going on in the sector, let alone what conversations are being had.
Okay, thank you. Mark, just with regards to the question, what is Condor doing at board level with regards to this, and particularly in a country that such as Nicaragua, with regards to the conversation and the reporting? The reporting for junior miners has obviously been slow to be adopted. What are you doing at Condor to get on top or continue to be on top of it?
Yeah. Okay. Thanks. I won't take the question posed sort of literally in terms of raw material supply chain, but as you say, for relevant to Condor, we had the IFC invest about $5.5 million in the company, and along with that, they send a team of 3 environmental and social technicians, if you like, to the project, and they assess the project and they come up with basically a gap analysis, which is called an environmental social action plan. And you sign a big shareholders agreement with them, and part of the taking their money, if you like, is to, within 12 months, fill the gaps. So they'll do a gap analysis and they'll have a plan, and you have to deliver on that. So one of the things that forced us to do as a company 5 years ago was to hire a load more people in the environmental and social side, and we've kept that going. I think that the cost to us has been at least the external costs and additional consultants and work on the ground has been 10 to 20% of the funds that we've actually received, which might otherwise, for example, in the development stage of an asset, gone into drilling or work. It's actually gone into putting in place or implementing the environmental social action plan and becoming completely in line with the 8 IFC performance standards. So as a company pre-development, we are completely ticked off to IFC performance standards for a company at our level. The IFC put a chartered environmentalist on the board of Condor at the time, Kate Harcourt, who's been with us for about 4 years now. And she was in site with me in Nicaragua in January this year. So we really do keep that up. And in terms of how do we implement that a bit further locally, and this is a cost for companies. It's a real cost. We're spending, in a small village of 300 people, 330 houses, we'd be spending externally at least on social engagement programs, at least $250,000, which is a lot of money. But we push it down. To answer your question, what are we doing locally? We have about 10, 12 people in the environmental and social team. And we push it down also to people in the village. So we've got engagement groups, or we call them involvement groups, in the community. So where the average wage is, say, $100 a month, we engage 6 youth on a committee, and 6 elderly on a committee, and 6 people on a water committee, and 6 on an artisanal miner committee. We have 6 of these, and we empower them with a monthly consultancy fee, if you like. But we then give that group some money to which to implement something that's relevant for that particular group I've just explained. So what you're doing is you're engaging the local. You've got your own people on the payroll, say full-time, say 10, 12 people. Then the villagers and local people you're engaging as well, another 30, 40 people to implement different things across their group. So you're using them, and they really welcome that. So just a little example, one of the conditions you have to do is a water participatory monitoring program. So if we've got to check twice a year all the waters in the streams, and we have a chartered an environmentalist working with us for the time, and she will engage the local school, the local healthcare centre, and kids will go on it, and local people, and they'll all take water sampling from 34 different monitoring points. So you're getting an engagement with them. Now, part of the point on that is drinking water. It's also about pollution that's already there from artisanal mining and an old historic mine before we actually start construction. So it's really important to take the local communities with you on this and empower them and make them feel part of the solution to environmental challenges which they have.
Absolutely. Thank you very much indeed. I've got one question to follow up with Nigel, which has just come from the thing, which I think it's actually been answered. So I will just quickly answer it, Nigel, for a quick question, then I want to just move on. On defining the cost versus investment on ESG issues, do investor time horizons need to change to reflect any return on that investment? And maybe just a quick answer to that.
I don't see as they necessarily do, no. I don't see why it should necessarily be that much more expensive. You should still be able to get your returns. Maybe the returns aren't quite as great, but I don't see why they should have to be a longer time horizon, to be honest with you.
Okay, good. I want to come on to the junior sector. So much the kind of general comments by everybody has basically argued the fact that the juniors and the seniors need to work better together and to effectively to take ESG forward in a more holistic and combined approach. Just before I get there, I just want to have a really quick question and answer is, if ESG can be classified as a success in mining industry over time, then will social licenses be easier to attain? We so often comment on the fact that they're difficult to attain. Will they become easier? Pippa, do you want to start off? Let's make
Sure.
We're going to do a quick round robin of quick answers on this one.
Absolutely. Look, the social license is part of a bigger phenomena, which is really the social contract. And everywhere in the world, the social contract, which is the relationship between the citizens and the state and between companies and customers, organizations and the environment, this is up for grabs in every part of the world. We're having a discussion about what is the correct social contract for the particular parties and locations. So it will not be surprising that we will be having this conversation in this sector. And it's not like it's a known. It's a completely up for grabs. Everybody is redefining it, especially in light of these recent global financial and health crises. What is the reasonable balance of power? What is the reasonable set of demands that must be met by all those parties? So the good news is this is going to lead to a lot more conversations and therefore conclusions over time.
Okay, anybody else want to comment on that? Aldo.
Yeah, just quickly, Jamie. I don't think obtaining social license will ever become easier. For the simple reasons that societal expectations will continue to grow. They have over the past 2 decades or more. That won't stop. There are just too many variables in terms of conflict, politics also in the way. But I think the way that companies go about addressing those expectations will make the difference in terms of degree of difficulty in obtaining that license. And I think that's where the progress will be made.
Okay.
Yeah.
I would just
Nigel.
make a point.
Mark, sorry, go ahead.
Go ahead, Mark.
You've started, so you've finished, as the famous
yeah, exactly.
said. Off you go, Mark.
Okay, just a quick one. I don't want quick replies here, but we've just permitted in the last 4 weeks 2 very high-grade feeder pits for another 230,000 ounces. And that process is 18 months. It's 18 different technical studies. But then you go, even though you might pass all those with the technicians at the different ministries, Ministry of Forestry, Ministry of Engineering, Ministry of Environment, you actually then got to take it to a public hearing, okay? The public hearing, and we had 300 people turn up at 2 public hearings or public consultations, that you present the project with 3 ministries, our team and the ministries do it. And the local people in Nicaragua, in this case, they vote on whether they want the mine or not. So you could go right through this process, do all your drilling, do all your technical studies, and the locals could turn around and say, we don't want the mine. So you as the CEO go, okay, I need to win them over. So you're driven by the practicality of wanting permits and your social, which is a social license, because without the local communities voting for it, you're not going to get your permit. So you've destroyed shareholder value. So it's all sort of very, very much tied in to actually permitting and sustainability on all that. So, and we've just been right through that over the last 18 months. So it's very, very integrated. So you've got to win them over.
Nigel, you nearly
Yeah.
started. So we finish?
I nearly started, but I didn't manage to finish, obviously. But no, I was simply going to add the point that I think as an individual mining operator, this you know, the ease of getting social license to operate, etc., in a country depends on credibility ultimately, and credibility comes from engagement, and it's fundamental. I mean, we started the conversation about perception of mining, and there's perceptions at different levels, be it the macro level, be it journalists, the wider media, but then there's perception of your own shareholders, and this again, it always comes back to engagement with the relevant people, local communities, your workforce, your investors. As long as you communicate and engage with them actively, then you can dismiss those negative perceptions into positive perceptions. And I think ultimately the social license and the license to operate in a country ultimately comes through having that credibility of following through with what you say you'll do, not just whether you score highly on Sustainalytics or whatever. I think it's about the relevance and the credibility of your business in that country.
Mike, unless you've got something particular you want to add, I'm going to ask you to kind of get involved in the next question. So you happy
Please.
with that? Okay.
Nope. Please, Jamie.
Okay, so thank you all for that. I think I really want to kind of spend the next 10 minutes or so before we do a few more questions from the floor, or whatever one says these days. There are, I think, a total of 43 initiatives that the Responsible Mining Foundation have come up with, which mining companies can effectively relate to, all of them relating to the UN SDGs to some extent or another. Are we in danger of making this too complex, a little bit like IFRS or 43-101, and therefore slightly missing the point? Taking it beyond that, do we feel as though social pressure has now moved the needle sufficiently to encourage the junior sector to embrace ESG, not so much from what they do with regards to their existing host country obligations, but to a reporting standard, but also therefore having a more kind of embracing process of so many more wider topics within ESG than what was perhaps just stipulated by the host countries. And lastly, how do we get the junior industry as a whole to encourage or to change to effectively drive this whole, I could say, this movement, this cultural movement, which has certainly impacted the investors so seriously or so significantly in the last 2 years? How do we effectively drive this, almost to a point earlier on said that we need the investors to drive it? How do we effectively get all of the junior miners, I think there are 4,000 public companies, to effectively adopt this in record time? Because obviously it's a now moment rather than something we need to ramp up to over the next 3 or 4 years. Who wants to go first? Shall I start off with Mike, who didn't talk on the last one?
Sure. Thanks, Jamie. Maybe I'll take the last part of your question there. I think it's most relevant to my position. Look, I think in getting the junior mining space to embrace ESG, I think we've sort of nailed it, that you have to look to the investor base. And really, from a purely economic standpoint, a junior miner being self-serving is going to say, well, you know, I'm going to continue to cut myself off from significant sources of institutional capital, let alone retail capital, if I continue to ignore ESG risks, if I continue to put ESG management last on my list of to-dos. I'm going to continue to cut myself off from people like the Church of England that Pippa mentioned earlier. You know, I know there are a number of endowments, university endowments, and other funds in the US that are now completely eradicating coal from their portfolios, thermal coal, for example. So I see that as just the first step, and it's going to continue more and more and more. And I think you're going to see more investors similar to Orion adopting the IFC performance standards, or, you know, EMEA, some other forms of ESG metrics that we've talked about as well. So I think it's just the natural progression of things. I think you're really shooting yourself in the foot as a junior if you're ignoring these risks. You won't be able to get that development capital. You're going to reduce your value in a trade sale. And just from a purely economic standpoint, forgetting that it's the right thing to do, you know, you're not serving your fiduciary duty to your shareholders.
Well, that's a big statement, I think, from the investor community, saying where the direction of travel is definitely going to be. So thank you. Nigel, the yellow box is almost on you, so why don't you go?
Yeah, by all means. I mean, we've just distributed and delivered our first sustainability report, and that's been an eye-opening exercise, I have to say. So the one thing I would say is that all these various standards we have at the moment, it's good in a way, but it possibly needs to be standardized. We need some kind of consistency, and then we've got a level playing field for everybody. Thereafter, what I would say, once the level playing field is established, there needs to be a bit more of the qualitative aspect of it as well, in terms of what's relevant for that particular mining company and what's material for that mining company. If you just scored by Sustainalytics and you scored poorly, doesn't mean that you're necessarily a bad company. I mean, I actually have a live example of that. We met our investors, I think it was in April of around about 2019, who said that we'd scored badly on the Sustainalytics reports because we hadn't published a sustainability report. And so we focused on that. But actually what we've been marked down on effectively, the investor did not mark us down in his view because he knew that we'd had a CSR director, for example, in place since 2013. We were doing a lot of things with the community. We were very active in terms of managing the environment, very good with our people, low staff turnover. So he knew from speaking with us that we were a good company in that regard, but we thought we had to focus and actually publish some more of our, sustainability metrics. So I think it's positive and drives the right actions. And I think, overall, I maybe started out the process possibly as a bit of a cynic about it, but I've embraced it, and I think it's been a very good exercise, actually. And it's made us learn a little bit more about ourselves as a company and what we can do better, and just in terms of thinking, how do you measure something like waste management or air quality or greenhouse gas emissions? Makes you think about how you manage it on site, and therefore you tend to do a better job with it. So it's been, in our case, a positive move. I hope that it will be positive with our investors. The sustainability report we started, the first one this year, is obviously the start of a journey. So now the challenge is really to set achievable targets and goals with the resources we have, and that are relevant to our particular business and our materiality of business, really. And that's the key. They must remain relevant, otherwise you'll get lost, like I've made the comment to you in the past, Jamie, about accounting standards and IFRS, where actually sets of accounts have become too complicated now. We do not want to go down that path. We want to keep it simple and relevant.
Thank you very much indeed. And one of the questions that came up, and actually Pippa answered it directly to Karen Nash, but I think a really important point on this whole area of the juniors is, if we acknowledge the fact that a lot of the juniors do set themselves up ultimately to have these wonderful discoveries and ultimately get taken over with a nice premium and the shareholders get benefits. The M&A, which is so relevant and so critical for the majors and also the other producers, doesn't have to be a major, it could be a Central Asian company, to extend their reserve base, their resource base for the future, requires taking over a junior. And the junior needs to, one of the areas of due diligence, of course, is to check out the ESG metrics of that junior, and to make sure that they comply and therefore ultimately do not have a negative impact on the senior company that has taken them over. How do you see this evolving when you have such an unstructured process, notwithstanding the fact that sustainability reports are coming out? I don't know, I see, Mark, do you want to answer that?
Yeah, I've got a couple of views on this. One from the top down push. I think in the developing countries, where many of the mines are, you do have a lot of bank, like take the World Bank, for example, lending to Nicaragua to build roads or reduce poverty in many parts of the world. I think they can push the ESG from the World Bank perspective. So they can insist, they can influence the ministries, because they can talk ministry to ministry or president to, they can talk government to government, and they can, so there can be a top-down push from the World Bank or the IFC and big multilateral lending organizations to the various ministries in the developing countries. And don't forget, the ministries need educating themselves, because they've got to enforce the environmental law with artisanal miners and the various challenges. The second thing from the bottom-up part I just make to this actually comes through to the issue of getting the project financed. So you used to have legal, technical, financial due diligence on an asset, you can now add in ESG due diligence. So if you're going to get a loan, and we're going through this process at the moment, one of the loan documents and a drawdown, if you want a $50 million, $100 million loan, one of the conditions of drawing down that loan is that you meet the ESAP. So they'll have a consultant from the bank goes in, assesses your project, you tick off technical, great mineralogy, and all the rest of it. And then there's a bit, well, you can't draw down on part of the loan, say it's in 4 stages, until you've completed and got your ESG or your ESAP up to a certain standard. So the banks are pushing that now. And that's a big change in the last few years. They didn't used to ask for that. But it's a practicality that a CEO has to deal with. And suddenly your chartered environmentalist on the board becomes the most important person to the CEO, because they're implementing the environmental and social things that plans you've got to implement to get the money down to build the project or extend the project. I just make that point. So it is changing.
Good. Pip, thank you very much indeed. Pippa, you had your hand up.
Yeah, I just also wanted to say, look, one of the things COVID has done is massively accelerated digitization. And so probably a 10 years worth of transition got moved into a few months. And so the speed at which you can know the reality, the underlying reality of what is happening with your assets is suddenly accelerated dramatically. And so that's by definition going to change what the requirements and demands are. But the old view was, I don't want to know, and so don't show me. The modern view is, I want to know, and I must know, and please show me the best you can what is happening on any particular site. And technology works in your favor as well, because the solutions today are so different. Your ability to address an issue is so enhanced by technology. I remember I was on a panel recently with the CTO from Vedanta, and he was talking heavily about all these new extraction methods that don't leave lots of residue that you have to contend with. These are really innovative thinking by major corporations about how do we do what we do. And so I think that's the other thing. Well, yes, it's speeding up, but the good news is so are the possible solutions.
Thank you very much. Aldo, I'm not going to ask whether or not you feel as though ESG is still regarded as an unnecessary bureaucracy and cost, because I know your answer on that. But again, coming from a slightly different perspective than most of the panel, are you encouraged by the impact that is clearly either being indicated by the financial side, in the case of what Mike was saying, or by what Nigel and Mark are saying, largely with regards to what is happening on the ground, particularly in the course of the last 2 years? Is that something you see as it's clearly positive, but is it going far enough? Are you encouraged, or perhaps you disagree?
No, I think no. Thanks for the question. I think there's a huge amount of great work going on out there. Back to a previous point, we need to talk about it. And when I say that, not from a communications for the communication's sake, but from making those key stakeholders aware of what's going on, ensuring that the conversations between investors and the companies are the right ones, so that companies can ask the investor question of how they embed ESG into the strategy and business model, how they truth test ground truth the data against their own strategy and an action on the ground. Proof is going to be in the pudding. So great work going on. And a lot of this complexity, I think, can be simplified by companies deciding what ESG issues are critical to them, making their investors aware of those, how they're dealing with them, and going back to outcomes and impact versus outputs. So I think if those conversations, if the juniors can have those conversations with their stakeholders, I think they're onto something really good, and it speaks to opportunity as opposed to cost. I mean, there's material. ESG equals material impact, whether it's billions of dollars installed projects in developing countries or even developed countries. Take Australia, for example, in coal projects, not to sort of highlight coal, but there's the investor, cost of capital, positive impact, cheaper capital if you get the ESG equation right, and all the reputational benefits from doing the right thing. And there's brand value to be had as well. So there's a lot of pluses there. I think there's great progress, but there's obviously a long way to go. And the question is, back to another point, how do we help those companies do better?
Excellent, thank you very much. Perhaps Beacon Events, if you could just put the poll back on and see if there's any significant change. And Andrew, I'll ask you maybe just to report back on the differences and maybe the results of that in your summing up at the end. I just remind the viewers, the question is, to what extent should objective ESG metrics factor in annual short-term senior executive compensation? And the four options are on the screen at the moment. So I think that largely concludes what I would like the panel. I think one area which I think was really interesting, which needs clearly better thought, is this focus of the help from the majors and the interaction from the juniors to try and find some alignment between the two, so that we can improve regardless of anybody's opinions of perception. We can move that to a more positive angle. And I think a lot of work, Aldo, you commented on a couple of that. I think a lot of work can come out of that. What I'd like to do with each of the panelists is perhaps just spend 30 seconds each in summing up a question, which is, will the trends pre-COVID accelerate, stay the same, or reverse following some normalization post-COVID? And I'll start from, well, Aldo, why don't you go? You didn't lead on some of the other ones, so I'll ask you to go and then go from right to left on my screen.
I'll try to keep this. I'll try to keep this to 30 seconds. I think the trend will gather pace. I think the world has chosen a path, to protect the planet. I think that there's, Paris and so forth, a testament to that. Another key number: 1 in every $4 invested nowadays are now going to responsible investment principles. So money is talking. But I think the big doubt for me is, and the big question for me is, the unfolding health and social crisis coming out of this pandemic, and the economic and political ramifications. I think history suggests that countries that turn, in times of crisis, either turn inward or open themselves up to collaborate internationally. I hope for the latter, but there's a big question mark for me if the social side doesn't go back to some semblance of normality. Just have to look at unemployment numbers.
Sorry. Yep, that's great. Mark.
Yeah, it's going to accelerate. So the trend is only one way. I think that the mining companies.
There we go.
The mining companies in various developing parts of the country are in some ways really able to step up to the plates, because they're the guys with the cash who can allocate more to help communities out, and also in less well-educated parts of the world can have got social teams and can put out messages on Facebook pages and educate people about the coronavirus. And we've done a lot of that in country, and I'm sure that a lot of people have. A lot of the mining companies are, because they're relied on even more in a crisis, whether there's a big flood event or whether you have coronavirus. So I think that's going to, if the mining companies play it correctly, it's going to help win community or get more support from local communities at the local level. And I think you've seen some very good examples of that out of the Canadian producers and Australian, no doubt too. But I've been following the Canadians a bit more.
Okay. Pippa, do you want to comment on whether or not this is going to reverse and do the opposite to what Aldo and Mark think, or are we going to see some encouragement?
No, I think that we are definitely seeing an accelerating environment, but keep in mind that the pace of change was already moving faster than most people could keep up with well before COVID, well before ESG, and the speed at which it is accelerating is itself accelerating all the time. Bucky Fuller, who invented the geodesic dome, talked about the knowledge doubling curve. And it said now that the knowledge doubling curve is literally happening every 12 hours. You know, at the turn of the century in 1900, it was happening every 250 years. Today, it happens every 12 hours. So one of the issues we have, not just in the mining world, but any participation in the world economy, requires an adjustment to that ever accelerating speed of change that is extremely difficult for humans in any endeavor to keep up with. So I think that's one thing that we have to get used to. It's not going to slow down. I don't see how it does. However, again, our ability to do something about what we're finding out is increasing, and that's a good thing.
Nigel, do you want to comment on that?
Yeah, quick 30 seconds. I mean, it's a fascinating question, and we could spend all day talking about it, I think, but it's certainly not going to reverse. I tend to agree with the rest of the panelists that it will accelerate. I think there's lots of things we're seeing which may have taken 10, 20 years to have happened are happening very quickly. Digitization, deglobalization. I mean, even the reduction of greenhouse gas emissions in a month of 17%, whatever, would have taken years to achieve. And I think everybody can see some positives from that. You see cleaner air around the world, and it's fantastic to see. I do have to, however, comment that I think there will be an overriding in the short term pressure of, you know, the financial returns and the pressure from an oncoming recession potentially against whether the world will do the right thing. And I think that's what will, you know, in the short term be a pressure really on both businesses and governments alike, really.
Thank you.
But I think ultimately it's going to accelerate. You know, it's going to happen. What's happening is going to happen, but I think there's a short term pressure is what I'm saying.
Thanks, Mike. Just if you could comment, because it's probably good, you see probably more companies, given the nature of being an investor, than any of us here in one go. So maybe you could comment on that. And maybe just at the same time, you could answer a question which has come up on the screen. Is a lack of progress in the mining sector due to companies being concerned about the low ESG scores? Is that, do you think, a hindrance? And what will enable them to focus on moving the sustainability journey forward? So maybe just finishing comments on that.
Yeah, of course. So just quickly on the first question, it's interesting. I agree with it to an extent with Nigel in that there will be some short-term pressure on companies. You know, with all of these potential stimulus packages that governments are promising around the world, you're going to hope that there's more demand for metal, and the hope is that you know, companies don't try to cut corners to provide that as fast as they can. Now, I don't think that's going to be the case. You know, we are in a sort of global humanitarian crisis, and I think history will show that anytime that happens, you know, afterwards, ESG and sort of those humanitarian-esque issues are highlighted. And so I really do think that in the short, medium, and long term, this progression towards better ESG practice in the industry is going to continue to accelerate, and if not more rapidly. Jamie, I'm sorry, would you mind repeating that second question there?
So just is the lack of progress in the mining sector, as perceived by so many, not by everybody, but by so many, due to companies being concerned about low ESG scores? I don't think there's any question, certainly within a lot of the people I talk to, that the rudimentary ESG scores put out by Sustainalytics and MSCI and other scoring factors quite often seem to be low in the mining space relative to perhaps other industries. And whether or not that is, certainly from first-hand experience with a couple of companies I'm involved in, we've certainly seen that slightly surprisingly as we had engaged consultants. So is that a disincentive? Are we potentially disincentivizing the industry when what we're trying to do is actually incentivize them? And I don't necessarily mean to say they've got to have high scores on day one, but is that a problem in itself?
No, I mean, I think transparency in the first place is the right way to go. So you're taking the right step forward by even going and publishing these type of metrics out there. I think inherently the mining industry has greater ESG risks, just basis what we do, than some other industries. But that's not to say those things can't be mitigated away. And I think as you know, the mining industry continues to be a part of these sustainability metrics that you're referencing, we will start to grow and grow and grow. And as people begin to understand the industry more, I think sort of that perception might be toned down a bit. Does that answer the question?
It certainly does, and it gives room for improvement.
Do you have another hour?
I mean, just to add on that, Jamie, I can say from our own experience, that low score that we heard about just drove us on to change the perception, because the perception of people who knew us was very different. So it actually motivated us to do something about it. So I would possibly argue the opposite is true.
Yeah. Okay. Well, that is good news, and I think that probably is a good place to stop. I think from my own point of view, I'd like to first of all thank all the panelists for joining and being so open in their discussions. I think from my own summing up, I think the industry, I think we're all reasonably aligned that this is going to move positively forward in answering the mining beacon question in principle, and it's going to accelerate. I think the industry is probably better placed than it's often perceived, but nevertheless, still a lot of positives to do, certainly in terms of reporting and alignment with majors. And I think one of the key points of having a trade body to kind of align some of these things, or other forms of alignment, would obviously help. And clearly there's been a significant positive impact onto the investor community in the last 2 years, which is clearly having an impact and will have a lag of an impact, but it is going to impact the industry over the course of the future. So I think that's what I've got out of this, amongst kind of 20 other things, which I won't go into, and I'll hand back into to Andrew to sum up and thank Mining Beacon for the opportunity for this on behalf of all of us, and maybe get an answer from the polls.
Yes, I think if we can just bring the poll up on the screen just to see what the final result was to the question: to what extent should ESG metrics factor into annual short-term senior executive compensation? I think if we are having the polling results just come up on the screen now, if I recall, I think 43% of you voted for the last answer, as in above 20%. So hopefully that's just coming back on the screen now. All that remains for me to do is to once again really thank Jamie, Pippa, Nigel, Mark, Michael and Aldo, and thank you to all of our listeners for dialing in. As I mentioned at the start, all registrants will be sent a recording of this webinar afterwards. We've also got some up and coming online events on the 23rd and 25th of June. We have our APAC Online Connect event, and on the 30th of June to 2nd of July, we have our EMEA Online Connect event. And of course, Mines and Money London, which is now being renamed as London Mining Week, will be running on the 1st and 3rd of December. For more great news and content, please check out our Mining Beacon website at miningbeacon.com. Many thanks, and see you again soon.
Thank you very much.
Thank you, Jamie.
Thank you.
Thanks all.
Thank you. Bye-bye.
Bye-bye.